is Doug Murphy. I'm Vice President of National Accounts, National Sales at Baltimore Life. I don't have any regionals underneath me. I manage all of the independent distribution, which you guys are a part of across the country. So it's very difficult to get in touch with. I travel a lot. I don't live in Baltimore. I live in Tennessee, but I travel back and forth to Baltimore all the time. But the primary thing I want to point out to you on this slide here is that we're trying to help you grow your business. I'm going to try to go over 4 products today that I think will help you grow your business. It gives you some opportunities in some areas that you may not have other products in, and trying to approach the existing clients with some different products. And I always say your biggest asset you have as an agent is your client base and how to mine that client base for other products and other opportunities that are out there. And I want to try to show you some of that today. So I really want to help you grow your business. The first thing we're going to talk about is our new iProvide product. This product is only available through your distribution. You can't get this outside of the Benavest distribution chain. So this product was recently rolled out the 1st of February. It's called iProvide Whole Life. It's a final expense product designed for the final expense market, as you'll see. But we think it's a unique opportunity for you. Some of the advantages of the iProvide: it has an e-application with an embedded pre-app application process. That pre-app application process is designed to give you, within the first 4 or 5 minutes, once you can get the client's full name, their full street address, the last 4 digits of their social security number, and an authorization either through text or an embedded device if you're there with them, we can do a pre-app process and know before you proceed on down through the application whether or not that client's going to qualify medically or not. That saves you time and effort in case the client doesn't qualify medically, but it also gives the client the benefit too. If we were to decline that based off medical information that we can find in that pre-app process, you can go to another company and that client, we haven't declined that client yet. We haven't started the application. This is simply a pre-app process, as you'll see. We do have some simplified underwriting. Again, you're going to know the eligibility decision in 3 to 5 minutes. There it says it's actually whatever it takes the time for you to get their full name, address, last 4 of their social security number, and then their e-app signature, their DocuSign signature on whatever device or process that you're using, whether it be text or email or there on your device. We do have 100% point of sale automated underwriting decision. We want you to know while you're there in the client's house whether or not that client qualifies. We have shorter and easy to understand health questions on the application. I know that a lot of you go through application questions and it may be an entire paragraph about 5 or 6 or more types of impairments that might be under one question. I'm going to show you some examples in a few minutes of an application question as it relates to COPD and how we have made those shorter and easy to understand. There'll be a few reflexive health questions for better underwriting decisions. So again, I'll show you the example of that as it relates to COPD. If you answer yes to COPD, and instead of just a yes answer, and we have to decide what kind of, if it's how bad the COPD is, we're going to ask you a couple of drop-down questions for the client as to when it was first diagnosed, what the treatment is, and that kind of thing to help us better underwrite it. We'll give you a preferred rate or standard rate options for ages 45 to 89. And then we have a modified return of premium options for issues ages 45 to 80. So that gives you an idea. And we have 3 different product ranges there that you can go from: preferred, standard, and modified. The minimum premium is $2,500. Here, the maximum face amount is $50,000. I think that's a little higher than you normally go on a final expense product. So that's critical for you as well too. We have incorporated Social Security billing in this. So if a client, you have different clients with different Social Security payment dates, obviously they may want to draft their premium payments around their Social Security billing. We enable our application process enables you to do that, and we'll draft on that Social Security billing date. We have a life pay version of the product. They can pay it for their life. They can pay it over 20 years. Or they could choose to single premium if they chose to do that. Now, not many people do, but some agents have asked for the option for the client who sometimes wants to do that. The last bullet point I have there is something I think I might ask a lot of times: what's the differentiator between final expense insurance and just basically small face amount simplified issue whole life? And really, there is none. Final expense is just designed, it's small face amount whole life designed to be sold in that final expense market for people to utilize those funds to pay their loved ones final wishes and funeral arrangements and that kind of thing. This $1,000 cash draft to me sets Baltimore Life aside, and it really is a differentiator in us and other companies. I'm not aware of any other company that does this, but if you've ever been responsible for burying someone, whether it be a client, a family member, or someone else that you've helped to bury, one of the first things you'll notice is when the client, when a person dies, whether they're at the hospital or at home or wherever that may be, you go to the funeral home, and the funeral home director, one of the first things they want is a down payment before they'll even go pick up the body, whether it be at the home or the funeral home. They need a deposit. And you can imagine if Angie and I were brother and sister, we went to the funeral home, and I'm not very well off, and Angie's fairly well off, and the funeral home director asked for us for $1,200, $1,500, according to where it may be at, to pick up one of our parents. Pick up one of our parents to bring to the funeral home. I may not have the money to do that right now, and Angie may could pay it, but is she going to get it back? How's it going to be paid? This $1,000 cash draft is actually a form that's near the back of the policy that you deliver to the client. And it's in most of all of our products, especially our final expense driven products. You can take that, the beneficiary can take that draft to a bank or credit union, other financial institution, and there's instructions in there for that bank, financial institution, to advance $1,000 on the death benefit to the beneficiary that they can use for purposes like that. Now, obviously, it's a cash advance. If the benefit on the life policy, the death benefit of $10,000, and we're advancing $1,000 here, the remaining death benefit is only going to be $9,000, but it gets this money in the hands. It gets this $1,000 in the hands of the beneficiary early on. They don't have to wait for a certified death certificate to make this happen, but it is very beneficial for clients and for beneficiaries, and it's a selling tool, I think, too, for clients who don't want those families to argue or have to have consternation over who's going to come up with that $1,000, how are they going to get it back, is our sibling going to split it, who's going to pay it, how are they going to get it paid, and that kind of thing. So it really takes that burden off of the beneficiary early on at a time that they probably least need that kind of stress. So I think that's important for you and important for the client, and important in that sales situation when you're trying to explain this process and this product to the client. Here's some of the product details. It's a non-participating whole life product. I say that because I'm going to show you a product in a few minutes that is participating. The product in a minute pays dividends. This one does not. We're a mutual holding company. It enables us to be able to pay dividends. You may or may not have products out there that enable you to do that. This is a gender-based, non-tobacco, has the non-tobacco and tobacco rates. Again, there's 3 underwriting classes: preferred, standard, and modified. And I'll tell you right now, about 68% of the cases that we come through are getting a preferred rate. When we first developed this product, I felt like that the preferred rate was probably one of those where you put it out there and not many people qualify for it. But the way we re-underwrite it, we underwrite it for more than 50% to get preferred. Right now,